Hello everybody, it's the 15th of June. I'm Joe Neighbour from Signal Centre. Hope everybody's doing well. Been a few missed shows of late due to Steve and I being really busy. Now up in London a couple of days a week, so a little bit of a challenge. And now Steve is off on his summer holidays. He's off to Italy celebrating 30 years of marriage to his beautiful wife Tina. So Steve, hope you have a fantastic time. So you've got to put up with me for the next week or so. Now going to get straight into it and look at the latest headlines. Again, if anybody has any markets that they're looking at or want us to check out, please feel free to post them up in the comments and I'll do my best to cover as many as I can. I'll just kind of stick to the main markets unless there are any requests. So let's get into the headlines because there are plenty of them that we need to go through. So just bear with me 1 second. So overnight, we had the Federal Reserve leaving rates at 5.25%. That was largely expected. The decision was unanimous, and according to the statement, the decision leaves rates unchanged at this meeting will give the central bank time to assess additional information and the implications for monetary policy. The Fed released its latest set of economic projections, the most attention on the forecast for the Fed funds rate. The end of 2023, the forecast was raised to 5.6% from 5.1%. Previously, the 2024 forecast increased to 4.6% from 4.3%. A majority of committee members expected that the central bank will again increase rates this year. Powell insisted, however, that there will be no rate cuts this year. He stated that nearly all policymakers view the future rate hike path this year as appropriate and that the labour market remains very tight. He added that a pause is a continuation of moderating the pace of rate hikes. He did add that the full effects of tightening have not yet been seen and insisted that decisions will be taken on a meeting by meeting basis. The dollar recovered yesterday from the lows that it posted following some of the data that came out. It recovered from a 4-week low after the decision to post gains with principal selling through the yen. The Japanese currency remained under heavy pressure with dollar yen at a 6-month high in the session. Overnight, we've seen some strong jobs data from Australia, which has had a fairly significant impact on anything linked to the Aussie dollar, most of them up quite substantially today. The labour market was stronger than expected with a jump in employment of close to 76,000 for May compared with expectations of close to 20,000. The ECB is in focus today. They will be announcing their latest interest rate decision. Consensus forecasts are for a further increase of 25 basis points, taking the overall rate to 4%. And again, forward guidance will be very closely watched as Christine Lagarde takes to the stage and looking for latest forecasts on what they expect for the economy. We've got a number of data points out today, which we'll come on to at the end of the stream. And overnight, we've also got a Bank of Japan policy decision as well. So we'll focus on that towards the end. Okay, let's get into some charts then, and I will actually kick off with cryptocurrencies today, just as we usually do. So we'll have a quick glance at those. Pretty much taking the same path that we've been mentioning now for a while. This is the daily chart of Bitcoin. It looks as though it completed a head and shoulders top pattern back here in May. We saw a retest of the neckline during the end of May, and then prices have continued to decline ever since. So we are in a downtrend at the moment. There's a big level of support here at 25,338. If we scroll back to the left-hand side, we can see there was a low from back here in May 22, then a retest of that level in August, and then another test of that level in February before finally breaking through. But now we're back down below that level and not looking too healthy at all, down another 1% today following a pretty nasty move yesterday. So very much under pressure at the minute with cryptocurrencies, and I'm assuming looking the same on Ethereum. We can see here's a big line of support around 1677. That's been taken out with a big move down yesterday and looks as though it is set to remain under pressure in the short term. Moving on to currencies, let's take a look at the dollar index. As mentioned, that bounced from a 4-week low yesterday. All in all, pretty choppy, pretty range bound, not really going anywhere for the time being. We did see a pretty decent rally that took shape throughout this period here from sort of May to early June before finding resistance around 104.20, and then prices have dipped back towards support here at 102.83, and we can see that did a job yesterday. There's a wick of that candle there that tested that level, and we closed above it. And so far today, we're actually engulfing all of those losses that we posted yesterday. Still very early in the session, but if we do go on to complete a bullish engulfing candle, that could be quite positive for the price action in the short term, and we may see another retest of this area here at 104.20. Let's take a look at some of the other majors, starting with cable. So we saw a break of trend here back in mid-May. Prices are now retesting the reverse side of that broken trend line, and also this previous support level here at 126.66. So on a couple of occasions now, we've seen attempts at trying to break through this level, and on each occasion they failed so far. If we can get a closing break above this level at 126.66, then that would be quite positive for the overall outlook, and may suggest that higher prices will be seen towards the next major resistance level we have at around 129.75. So looking pretty interesting at this level here. If you are looking to speculate on this particular market today, do be aware we're into a big area of resistance here, so that could be a reasonable level to consider a short trade. But if we look at the trend that's been in place since October, although we do have a break of that trend, overall the bias does remain bullish on this chart, but we are at a key level today. Let's take a look at Euro US dollar. So prices were trading within a bullish channel for a significant period of time. We then saw the breakdown in mid-May, forming this really kind of tight wedge formation, which eventually broke to the upside on the 1st of June. And since then, prices have continued to grind to the upside, helped in large part by the fact that we've seen some weakness in the US dollar. So this looks to be trying to push to the upside. We do have some resistance around 109.42 to consider, but at the moment there appears to be a reasonable amount of fresh air on the upside for this to attempt to move into on the upside in the short term. But as we can see here, prices, again, like we've seen with the US dollar, but in reverse, are quite choppy and quite range bound. So do be careful there. There's no definitive trend in place at the moment in the short term. Got a couple of requests coming in to just check I'm on top of those. I will take a look at some of the other majors. Let's take a look at dollar yen. As mentioned, that was making new highs. Big move to the upside today, taking out this resistance level that was previously posted at the end of May. That was at 140.86. We're bursting through that and now fast approaching a 61.8% fib level at 142.50. So that's looking pretty strong. Obviously helped here by the fact that we've seen some weakness in Japanese yen, and we've got the BOJ announcement overnight. So we need to be mindful of that. That could have a fairly significant impact on this market. I'm going to take a look quickly at the commodity currencies, Aussie versus US dollar. So that's had a really nice move to the upside of late. Found some support around 65.20. Big move to the upside, now into some resistance levels here at 67.93. We're above it today. Yesterday we attempted to break through it, but actually closed back below it ever so slightly. So this is pretty significant resistance here that we need to be mindful of. A close above this level would be a pretty bullish signal and may suggest we'll see a continuation higher. But of course, that's going to be driven in the main by a weaker US dollar. With New Zealand dollar, that's down by 0.6% almost today. Again, pretty choppy here. We can see that prices were looking as though they were going to break down, but we did find some support at a 50% Fibonacci level, and prices have continued to move higher since then. We've got some resistance here at 61.82, which we're currently above, and above that potentially into 62.61. So all in all, pretty choppy, but there appears to be a bit of a bearish bias here. We can see there is a sequence of lower lows and lower highs. So that is the definition of a downtrend. It's not certainly as clean as we would like, but there clearly does appear to be a bit of a bias here. So do be aware of that. Okay, request. Let's take a look at New Zealand, on New Zealand dollar, US dollar. So we've covered that. That's done. And going to take a look at sterling Oz. That's down by 0.2% today. Interesting level here, actually. We can see from these lows that we posted in September last year, there's a nice trend line in place, and prices have fallen back to this trend line, and so far continuing to find support at this level. So each time we've approached this level, it appears as though it's been enough of an incentive for the bulls to buy, and they've tried to push prices higher. We are off of the worst levels of the session today. Maybe an indication that, again, the buyers are stepping in here and attempting to push things higher. We did have a short-term uptrend here, which broke, but I think we need to focus on the longer-term trend line here, which at the moment is holding. So potentially an opportunity to buy it, maybe pushing back towards these previous highs. What I would be mindful of is that maybe this is forming some sort of top pattern, which we need to be aware of. So if we do break down through these lows, which are coming in for me at 84.99 or 85.00, then that is likely to trigger maybe a bit more of a corrective move to the downside towards this next support level at 82.61. So for now, while the trend line continues to hold, opportunities to maybe buy the dip. If, however, this level breaks at 85.00, then that could trigger further losses in the short term. Okay, that's currencies dealt with. Let's take a look at commodities and see what's happening there. We can start off with oil. Take a look at Brent. That's again weaker today. Overall, the trend is bearish. We can see here trading in a big bearish channel. Of late, prices have been very tight, trading within a range here between 71.43 to 78.04. If we do get a break to fresh lows here, then that could trigger further losses within this bearish channel and likely to set up lower prices. So looking pretty range bound in the short term. Obviously looking now for a break of this range, a break to the upside, and we're also going to take out probably the bearish channel, which will be a positive thing. We can look for a price high rise towards 89.26. And if we get a break through that 71.43, then it's likely we're going to see a continuation lower within this bearish channel. On crude, similar situation. We've got a big bearish channel that's in place at the minute. Price is pretty range bound and undecided at the moment. We'll be looking for a break, ideally through resistance at 74.67 to trigger a bit of a rally to the upside. On the downside, watching these levels between 62.23 to 64.33. Let's take a look at gold, expecting here to see some weakness because we've seen a bit of a dollar bounce. We can see this 2070 level was very significant. And if we scroll back to the left-hand side, we can see there was a previous high back in March 22. So it looks like this has formed a bit of a top, making new lows today, which isn't particularly healthy for the price action. So at the moment, we're testing that level, and that may trigger further losses to the downside. So gold looking very much under pressure in the short term, and a similar situation with silver, which is actually performing significantly worse today. It's down by 2.7% compared to gold only being down 0.6%. And we can see there's a big red candle here engulfing all of yesterday's attempts at moving higher. So we were trading within a bit of a wedge, a really tight one. We broke down through that. We rallied to retest the previous resistance, and since then it's just been one-way traffic really to the downside. The 50% fib level did provide some support. We'll wait and see how it reacts if it gets there again. If that fails to hold, then we'll be looking for a move down to that 61.8% fib level, and then an extension of that down to the 78.6, which is at 21.22. Let's take a quick look at copper. My chart's a bit of a mess here, but it's had a decent bounce in recent sessions and maybe into some resistance. Let's just clean this up. Have a look at what I'm looking at here. So there's a resistance level there, a couple of key lows, broke down through that level, now trying to retest it. Above it at the minute, but clinging on, it would seem. So no real clear direction there on copper either. And finally on natural gas, prices just attempting to maybe try and bottom out here. Prices moving sideways, the ranges are very tight. No real clear indication. Massive level of support at 2.1. If that breaks, likely to see a continuation lower. In order for prices to continue moving to the upside, we probably need to take out this sequence of highs here, which will come in around about 2.6. So if we can see a breakthrough that, then that could trigger further upside in a corrective move, but needs to do a hell of a lot more. And at the minute, not really a lot happening here. So if you're in natural gas, the likelihood is you're stuck and just waiting for this range to eventually break. So do be careful if you're in that market for now. Okay, let's take a look at indices then to wrap up the coverage. Let's start off with the Euro Stoxx 50. A little bit under pressure today, down by 0.1%. Seems to be outperforming some of the other European markets like the CAC and the DAX. Prices again pretty range bound, pretty choppy in the short term. We found some support around 42.62, but we do have big resistance at 44.15. Going back to the left-hand side, that was a previous high from back in November 21. So seems to be on the front foot at the moment over the last few sessions, but big resistance looming above. Looking at the CAC, similar kind of situation in that we are off of the highs and in a corrective mode at the moment. No real sort of clear signals on that for now. Let's take a look at DAX. That's again retesting these previous highs around 16,300. Again, back to the left-hand side, we can see there's a couple of attempts at trying to break through this level back in November and January 21 and 22. So significant area of resistance. If we can break above that, then it could open things up on the upside. It's had a very decent run higher really since October last year, but still got a bit of work to do to break through. But looking pretty good overall. Certainly the trend is quite favourable on the upside. Let's take a look at the FTSE 100. So this is struggling, did make obviously some new highs back here in February, but since then it's been a pretty choppy old ride for the FTSE 100. Attempted trying to move higher in recent sessions, but it's been pretty choppy ever since. We've got resistance at 76.89, big support down here at 72.30. Bit undecided really about where to head with this, to be honest. Bit concerned that maybe we're forming a bit of a top, but still plenty of work to be done there before we can get any confirmation that that is indeed the case. So likelihood is we are going to continue seeing more sideways and choppy price action without any clearly defined trends. The other thing to consider with these indices is that we're heading into the summer months now where people go on holiday. There tends to be less activity in the markets, and that can create some sort of choppy and directionless conditions in the market. So do be aware of that. Let's take a look at these US markets then. Let's start off with the NASDAQ. This has been on an exceptional run higher and really leading the charge in the US markets. Obviously, there's a few constituents within this market that are really driving this. Some of the big tech names, as we are familiar with, things like NVIDIA, pretty much replicating this chart. And looking very bullish indeed. So where's this going to run out of steam? Well, no real clear levels. I think we've got a measured move target or an extension of a measured move target coming in at 14,777, but that's sailed through that without any real issues. If we take a look at these highs that we posted back here in November down to these lows, then we can maybe look for some Fibonacci levels to give us a bit of guidance. We've got a 78.6% Fib level coming in at 15,414. So that could be an interesting level to target in the short term. We've also got a couple of highs here, which acted as resistance. That's coming in at 15,275. So I think for me, somewhere in that kind of region there, maybe a decent opportunity to take some profits. It's unlikely that we're going to see continued one-way traffic in this market. But if you've been riding this all the way up, then you may want to start thinking about your exit strategy here and how you're going to bank some profits and maybe look to go again on some form of a pullback. But clearly, NASDAQ is leading the charge at the minute, very much the number one market at the moment in the globe in terms of its performance. Let's take a look at some of the other US benchmarks. Dow Jones a bit choppy, obviously only 30 constituents, mixture of industries, as opposed to the NASDAQ, which is very tech focused. We've got a big area of resistance here at 34,295. We've still got a sequence of lower highs as well that we need to be aware of. Yeah, prices not going anywhere particularly fast. Obviously had a very nice bounce in recent sessions, but into some resistance here, which may quell the rally in the short term. Let's take a look at the S&P 500. So that's looking pretty good. That's broken through resistance at 4195 and continues to push higher. It's also taken out this resistance here from back in August last year. So that's a nice move to the upside and quite encouraging that we're getting a decent price action in the broadest of the US economies. 500 stocks make up this index. So when we are assessing the health of the US market, this is really the one we want to look at to get a steer from, and we're getting some positive signs. It looks like we formed a bottom here on the breakthrough. I wouldn't be surprised if we do get some sort of corrective pullback just to really consolidate some of these gains that we've seen of late. But ultimately, it looks to be on the front foot and prices are seemingly wanting to move higher, which is good. And obviously, we hope that we can see this replicated through some of these other markets that we may follow, particularly in Europe. Okay, that's it for the analysis. Don't think there's any other requests, so I'll move it on to the gun to the head challenge. So this is where Steve and I pick trade ideas live on the stream. A couple of basic rules that we follow. We both must have stops and targets on these trade ideas. Obviously, it's only going to be me today. We must also have risk-reward ratios of 2 to 1 or better on these ideas. These ideas are closed out at 9 p.m. UK time unless the stops or the targets are hit. We are running a live account, and the way that we're managing this from a risk management perspective is that we risk 1% of trading capital per trade. So we've only got a small account. We started off with £2,000. It's currently a little bit below that, but we've had a bit of fun in the process and hopefully showcased, a bit of what it is that we look for on trading opportunities, but also how to effectively manage risk so that we're not blowing our account up and left with nothing to trade. So we can see here on my screen, I've got the Oanda Live account linked up. Our account balance is at 1,882, so down by just over £100 from when we first started, and effectively we're risking 1% of capital per trade. So I'm going to come up with a trade idea now. I'm going to risk around about £18.80 on that trade, and I'll be looking to make at least double that on the upside. So I haven't got anything particularly stand out at the minute, so I am going to have to take a flick through some of these charts while on the stream and try and spot something that stands out that looks maybe quite interesting for a potential move today. So I'm going to probably stick to currencies, just have a flick through some of these and see what's shaping up, if there's any kind of candlestick patterns or formations on the hourly chart that really stand out for me, and then I'll attempt to get a trade on. So we've got to be mindful that we've got a fair amount of data out today. We've got the ECB, so that's initially kind of putting me off maybe looking at anything linked to the euro unless there was anything particularly stand out. And we've got some US data as well, so it could be a pretty choppy session, but some of you may like that volatility. Certainly if I want this trade idea that I'm going to come up with now to play out, then I probably do need some volatility in order for that to work. Okay, nothing particularly great there. So let's go back to the dailies actually, because I was focusing on sterling US dollar, which was looking quite interesting in that it was into a pretty significant area of resistance here. We can see this red line dating back to May 2022, a few attempts at trying to break through that. Yesterday made a marginal new high above it, but closed below it. So is there a bit of a failure or a swing failure potentially about to happen there? I'm going to be brave and go for it just because it is into that major level on the daily, and see if I can do something with this. I need to make sure I'm on the right one. So I need to make sure this is an Oanda price. So there we go. I'm on the right one now. And how am I going to structure this? So we know the major resistance is higher up. In fact, it might be handy to draw that level on the hourly chart. So that is at 26.67. So let's just get a horizontal line, 26.67. So that's the main area. I mean, obviously, we project that back to the left-hand side, we'll be able to see why that is an interesting level. So let's get this parameters on. I'm going to go with a stop above yesterday's high. Just want to give it as much safety as I possibly can. And then in terms of the downside, as a minimum, I'm looking for 2 to 1. So I'm going to target a move down to that level there at 25.40, give me just a touch over 2 to 1. And let's see if I can get that on as a trade. So trade, create new order. It's going to be a market order. I'm going to be selling it. My take profit level is going to be at 125.40. My stop loss level at 127.02. I'm going to risk 1% of capital. Risk reward not quite good enough, coming in at 1.96. So let's extend that. In fact, let's just go for these lows here. Nice round number of 125.00. So target 125.00. 2.7 now as a risk reward, risking 1%, £18.68, or just a shade under that. Will it let me change that? Yeah, £18.82, selling 4,408 units, sell. Okay, so that trades on. We're live. I'm selling sterling US dollar for the reasons mentioned. Big area of resistance on the daily chart. And let's see how that plays out today. Okay, data-wise today, as mentioned, there is a fair amount out. So let's just do a bit of a recap. Sorry for the size of the text, but in order to fit it on the slide, I had to go quite small because there was so much data that we need to be aware of. So the first one that is coming up today is at 1:15 UK time. That's the ECB monetary policy decision. As mentioned in the commentary at the start, the expectation is that rates will be raised by 25 basis points, taking the overall rate to 4%. At 1:30 UK time, we've got a number of US data points out. So we've got US retail sales, the US New York Empire Index, the US Philly Fed Index, and US jobless claims. So big bout of data out there. Expect volatility across all of these between sort of 1 and 2 o'clock. And then at 1:45, we've got the ECB press conference. So that will be following on from the rate decision. Be looking to Christine Lagarde for her comments about monetary policy going forwards, and that could dictate the market, certainly from a euro perspective, throughout the rest of the afternoon. For the rest of the week, tomorrow or overnight, we've got the Bank of Japan policy decision. So that could have significant impacts on the Japanese yen, which already is under a significant amount of pressure. So we need to be careful of that. That's going to happen overnight. So if you've got any yen exposure, you don't want to have any sleepless nights particularly. So make sure you're covered and got some decent parameters in place on your trades. And then next week, we've got UK inflation data, which will be very interesting, as well as the Bank of England policy decision, as well as a number of other numbers as well. Okay, that's it from me today. Thank you very much for watching. I'll be back tomorrow morning. And in fact, next week it's going to be a bit of a struggle for Steve and I to get some new streams on. I'm actually going to be in Cyprus visiting a number of brokers, and Steve's going to be continuing these holidays. So we'll do tomorrow, and I'll hopefully be able to get something done next week. But if not, we will be back sooner rather than later. So thanks for watching, everybody. I will see you all again very soon. Have a great day. Goodbye.